I'm Caroline Hyde. This is Bloomberg Technology. Coming up, tech mobilizes against the travel ban. We'll cut through the chaos and the confusion and analyze the vocal opposition streaming out of Silicon Valley. Plus, the world's richest man speaks out against the immigration fallout. Microsoft co-founder Bill Gates weighs in ahead. And Snap decides to roll with the NYSE over the NASDAQ. We'll dig into what could be the biggest tech IPO since Facebook. But first, to our lead. Silicon Valley finds its voice as President Trump's immigration ban fuels outrage across the tech sector. On Friday, Trump signed an executive order restricting immigrants from 7 predominantly Muslim countries. By Monday, Bloomberg reported that Trump's next order on immigration may be an even greater blow to the US tech scene, targeting the work visas that the likes of Google, Apple use to recruit talent overseas. White House Press Secretary Sean Spicer addressed the reform efforts earlier.
You've already seen a lot of action on immigration, and I think whether it's that or the spousal visas or other type of visas, I think there's an overall need to look at all of these programs, and you'll see both through executive action and through comprehensive legislative measures a way to address immigration as a whole and the visa program.
For more, we're joined by Bloomberg Politics White House team leader Alex Wayne in Washington. Alex, consternation coming from the tech leaders in Silicon Valley when it comes to the executive order, and now focus on what could be attacks against the visa as well.
Yeah, I think this H-1B order, if it comes, is a much bigger threat to Silicon Valley than the order that Trump issued on Friday. Although I think this H-1B visa order could be more popular among average Americans than the immigration order on Friday. There's been, especially in Congress, among Republicans and some Democrats in Congress, there's been concern that tech companies have abused the H-1B process. They've used it to recruit overseas engineers at the expense of American ones, and essentially use the H-1B to suppress salaries for tech workers here in the U.S.
I mean, we're just seeing pictures of the protests that occurred over the weekend. There has been some fighting talk coming back from President Trump about the reasoning behind these particular demonstrations, perhaps the chaos that we saw in the airports.
For sure. He says that this order was entirely aimed at making the U.S. safer. He's compared it to a review of Iraqi refugee the flow of Iraqi refugees from that country in 2011 by President Barack Obama. But there are some key differences. In 2011, the Obama administration said that they had specific credible evidence that Iraqi nationals might be planning terrorist attacks in the U.S. And in fact, 2 people were arrested, 2 Iraqi refugees were arrested in Kentucky shortly before Obama issued that order. In this case, the Trump administration hasn't offered any evidence or even asserted that there's a specific credible threat to the United States. They've simply imposed this order and claimed that it has to be in place for security reasons.
Fascinating analysis. Bloomberg's White House team leader, Alex Wayne. Thank you for being with us, as ever. Now, US tech leaders came together in a unified anger over the weekend in response to President Trump's immigration order. Bloomberg's Caitlin Meehan has this recap of, well, who's said what so far.
Facebook CEO Mark Zuckerberg was one of the first tech leaders to speak out. In a post on Friday, he wrote, "Like many of you, I'm concerned about the impact of the recent executive orders signed by President Trump. We need to keep this country safe, but we should do that by focusing on people who actually pose a threat." Netflix CEO Reed Hastings wrote the next day, "Trump's actions are hurting Netflix employees around the world and are so un-American, it pains us all." Uber's statements appeared to grow in intensity over the weekend. This after early backlash to surge pricing at JFK Airport amid protests and a taxi strike. CEO Travis Kalanick tweeted, "The travel ban is against everything Uber stands for. Any driver who can't work because of the ban will be compensated for lost earnings. We've set up a $3 million legal defense fund as well." Rival Lyft also promising to donate $1 million over 4 years to the ACLU. And Airbnb CEO Brian Chesky offering free housing to refugees and anyone not allowed in the U.S. Elon Musk also weighed in. Remember, the Tesla and SpaceX CEO was born in South Africa. He tweeted, "The blanket entry ban on citizens from certain primarily Muslim countries is not the best way to address the country's challenges." But he went on to ask followers to read the immigration order, saying, "Let me know specific amendments. We'll seek advisory council consensus and present to the president." At least half of the top 20 U.S. tech companies were founded or are currently led by an immigrant. Among those, Microsoft CEO Satya Nadella, Google CEO Sundar Pichai, and Apple CEO Tim Cook, all issuing statements condemning the travel ban and supporting their immigrant employees.
That was Bloomberg's Caitlin Meehan. Now, for more on the tech industry impact of President Trump's immigration order, I want to bring in Bloomberg Technology's senior executive editor of global tech coverage, Brad Stone, and live from Tokyo, it's Bloomberg's managing editor of Asia tech coverage, Peter Elstrom. Brad, first to you. We're really seeing tech stand up unified in anger, it seems.
Oh my God, this is a massive political repudiation of the Trump administration. And I think two things are going on here. One is, as Caitlin said, Silicon Valley derives an enormous strength from immigrants, going back to Andy Grove at Intel, to Satya Nadella at Microsoft. Number two, these are blue state companies, and their employees, by and large, did not want to see Donald Trump president. They are reacting, very negatively to this immigration executive order, and I think they're putting a lot of pressure on their leaders to come out and take a stand.
Fascinating. Many citing, of course, Steve Jobs himself was son of a Syrian. Peter, dig into us where we go next, because there's much concern building among those very same tech leaders that next is going to be the visas that are going to be analysed and maybe executive ordered against.
That's right. Yeah, there are these work visas that are very popular with tech companies. They help to be able to bring in workers from around the world, either for short-term or for longer-term assignments. And to be clear, maybe it's good to begin with a caveat. What we saw is a draft of an executive order. It hasn't been signed by President Trump. It may be modified before it's actually signed into law. But there are a couple things that are very clear. One, the work visa programs as they exist right now do not work to the original purpose of their legislation. And two, the changes are consistent with the kind of populist statements that President Trump has made. It looks like Trump and Congress are going to look at a variety of reforms aimed in the direction of giving American workers more priority and then paying the workers who come in from outside more money instead of bringing in lower wage workers, trying to pay them more.
And Brad, I mean, what seems so interesting here, yet perhaps more fuel to the fire for many of those tech leaders, Peter was spelling out for us. And there were some olive branches to begin with. It was only December the 14th that we saw the tech leaders in the room with Donald Trump. Is all that going to unwind?
No, not at all. I mean, this is why we keep seeing Eric Schmidt, going to the White House, going to Trump Tower. Why executives like Elon Musk and Travis Kalanick of Uber see the need to be on the business council despite the PR price that they are paying among their employees and some of their customers for being affiliated with Trump. They want a seat at the table. They want to push their agendas. The H-1B visa program is prized in Silicon Valley, and they want to maintain it. And so that's why they're trying to advocate on their own behalf.
Peter, is there any update as to the timing of this? I know you said as yet the executive power is perhaps not quite as strong on this front, but could we see it as soon as this week?
Well, there's speculation about it coming relatively soon. It'll be difficult to tell, given the backlash against the original executive order on immigration. It's not clear whether that will take additional time. I do think that you're going to see a split, though, over the H-1B issue between the U.S. tech companies that are recruiting highly paid workers from overseas to work on kind of specialized assignments and the outsourcing companies, which have typically brought in workers that are paid less money. And I think the reforms are aimed at trying to split those two and looking at the differences between them. If there are fewer visas that go to the outsourcing companies, that actually means there may be more available to the Apples and the Googles and the other tech companies that are bringing in specialized work. And
just lastly, Brad, when we're looking at some of the actions that we're seeing, I mean, Brian Chesky looking at donations, in particular to the ACLU, that seems to be an interesting tack that some of the leaders in tech community are taking, perhaps not speaking out directly against President Trump, but perhaps trying to put in place help for those, particularly their own workers.
Yeah, not to interpret it all cynically, but you're seeing tech CEOs really strive to kind of demonstrate their bona fides. And so, with that donation, that pledge of support of refugees, Brian Chesky kind of hit a home run. Lyft donated $1 million to the ACLU. They kind of hit a home run. And then poor, sad Uber, kind of stumbling. There's not a lot of rationality behind this Delete Uber campaign that we're seeing on Twitter right now. But, people just sort of, the sort of anti-Trump crowd concluded that they weren't being strident enough in their communications on the immigration executive order, and here they are kind of stumbling to strengthen their own statement. So a little bit of optics at play here.
Travis Kalanick, sometimes not always the master of PR. We'll be discussing that a little bit more with you, Brad Stone. But of course, Bloomberg's managing editor of Asia Tech Coverage, Peter Elstrom, joining us from a beautiful Tuesday morning, Tokyo, golden lit behind you. And that was senior executive editor, of course, Bloomberg Technology, Brad Stone. Now, we're also keeping a close watch on the markets. US stocks pulled back in a big way in the session. The Dow saw its worst drop since before the US election. Please say Abigail Doolittle covers the markets for Bloomberg News, joining me from New York. Take it away, Abigail. What have you been looking at?
Hi there, Caroline. Well, it was certainly a rough day for stocks here in the U.S. As you mentioned, stocks had their worst day of the year, led by the tech-heavy NASDAQ. The NASDAQ at the lows, and we have a great two-day chart that really exemplifies today's plunge, but at its lows was down nearly 1.5%, recovered to some degree, but those high beta stocks really led the charge down, not just leading the NASDAQ, but also the big drags on the S&P 500 and to some degree on the Dow. Now, behind this, the biggest point drags included Alphabet, Microsoft, Facebook, and Netflix. What those companies have in common is what you all have been talking about so far this evening, or the fact that the heads of these companies did come out against the Trump travel ban, really creating the concern that perhaps this could work against these companies. In fact, some are saying that the criticism out of Silicon Valley against the Trump travel ban was the strongest. As for what it could mean for these companies and stocks, I did speak to Bloomberg intelligence analyst Paul Sweeney just moments ago. He said that it comes against an issue of headcount, their ability to attract new talent, and that long term it could truly be a negative. Restraints could be against immigration, could be a negative for this sector. And speaking of the sector, when we hop into the terminal very quickly and take a look at #BTV 5576, this chart suggests that tech is overextended well above the 200-day moving average, while the relative strength index is also in overbought territory, coming down, suggesting that today's declines, Caroline, could just be the beginning of a little bit of a pullback for the tech sector in the weeks ahead.
Love a relative strength index indicator. Thanks so much, Abigail Doolittle. Great to have you from New York. Now, coming up, Snap's long-awaited IPO, why it's decided to list on the New York Stock Exchange, what the signals for NASDAQ's popularity as a venue for tech trading debuts, or lack thereof. Next, this is Bloomberg. Now, after a long courtship, Snap has chosen a suitor. The maker of messaging app Snapchat plans to list shares on the New York Stock Exchange instead of the NASDAQ when it goes public this year. That's according to a person familiar with the matter. The California-based company is following in the footsteps of some of the largest technology listings since those technical glitches at the NASDAQ botched Facebook's 2012 trading debut. Joining us now is Bloomberg technology reporter Sarah Fryer, who helped break that news. Sarah, it seems those memories live long when it comes to the NASDAQ.
Absolutely. There are a lot of people in the markets right now who are worried if NASDAQ had that technical glitch, nobody wants that to happen again. Big tech IPOs have shied away from using the NASDAQ for their listings and have gone to the New York Stock Exchange. There's another factor, though, which is that the New York Stock Exchange has been using Snapchat quite frequently. They've shown that they understand the product. They're working with brands and updating their own Snapchat story. So they've certainly been working to appeal to Snapchat separately of this battle.
Amazing when some social media know-how seems to pay dividends. What about how Snap is going forward in terms of its own roadshow? We're expecting a little bit more meat to the bones in terms of public information coming out later this week.
Absolutely. Snap has filed privately to go for an IPO under the JOBS Act. Those documents should be made public by the end of this week, we've heard from sources familiar with the matter. So we'll finally get a glimpse at how the business has been doing. We'll get to see revenue, we'll get to see EPS. We'll think of it kind of as the very first earnings report we'll ever see for Snapchat.
It's going to be fascinating. I know you'll be pouring through it for us, Bloomberg Technology. Sarah Fryer, thank you for joining us as ever. And let's stick with Snap's IPO with eMarketer Principal Analyst Debra Williamson. Williamson specializes in social media marketing and the demographics of social media users. Debra, great to have you on the show. Flying in for Seattle for us. And
thank you.
The IPO, what do you want to get into the nitty-gritty of when that public information does come on Snap?
Well, obviously the revenue. I mean, eMarketer forecasts that Snapchat's going to have $935 million in revenue this year. We want to know if that's true, first of all, but second of all, you know, this is a company that's growing so substantially. It's becoming a part of the lexicon just like Facebook was a few years ago, and it's exciting to watch just how much they've changed the way that young people communicate.
What, in terms of the question marks, are still left for you? Because they're trying, as you say, they're going out trying to woo in the future of Snap. They're trying to make sure that it looks like there's options in terms of marketing, in terms of perhaps not just millennials. What are you left with concerns about, perhaps?
Well, certainly the advertisers are still wondering just how effective Snapchat is. They've done a lot to make the advertising more effective, but still very experimental for advertisers. I think usage, I mean, obviously we see a lot of teens and young adults using Snapchat, but are the moms, are the grandmas going to use Snapchat? You know, maybe not. Does that matter? Those are some questions that I have.
It's interesting. We're actually seeing Facebook. They couldn't buy them. They're trying to beat them now. They seem, first we had Instagram taking the stories. Facebook seems to be taking many a leaf out of Snapchat's book. What about Facebook? We've got the earnings coming up this week. I'm fascinated by the EA function on the Bloomberg, which really shows you that, well, maybe we're starting to see a slowdown in the growth of Facebook, particularly when it comes to net income. We're expecting 97% growth, so nearly doubling for the fourth quarter, but then suddenly it's likely to average only at 37% for next year. Can you talk to us about the revenue streams for Facebook, where they need to grow?
Yeah, you know what? I think Facebook has a lot of things in its arsenal. We're seeing the main platform perform still really well. You know, we're estimating that Facebook this year was going to have $33.76 billion in ad revenue, second only to Google. So that's only the beginning. They have Instagram generating about $3.64 billion in revenue, ad revenue this year. And then they have WhatsApp and Messenger that are coming online with advertising, most likely sometime this year. So I think it's a multiple platform strategy.
And will we start to see the bang for the buck when it comes to WhatsApp and Messenger? Because, of course, they initially said WhatsApp wouldn't be monetized. It now clearly will be.
Yes, that is a sticky one, but this is Facebook, and Facebook, you know, as we know, changes its mind and changes its tune, as we all have seen multiple times. You know what? It's going to be a slow process. I think consumers are still getting used to the idea of businesses being on apps like Messenger or WhatsApp to begin with. Facebook's just now starting to test advertising on Messenger, hasn't started to test advertising on WhatsApp yet, so I think it's going to be a slow process. But this is a hedge against that idea of ad load being an issue for Facebook, and that came up in the quarterly earnings over the past few quarters, I think. And I think all of these individual platforms that Facebook offers are going to be able to give Facebook that boost that it needs if the ad load does become a problem on the main platform.
Do you think we'll see in the numbers, perhaps not in the fourth quarter, but next year in the first quarter, second quarter, any of the backlash from the fake news that they've having to tackle with, perhaps institutions like news organizations not seeing quite the bang for their buck when it comes to their own adverts?
You know, that is an issue. I think the fake news combined with, you know, perhaps some fatigue that people have over the relentless political discussion that's going on right now. You know, advertisers, their brand safety is number one for them. I mean, they want to be in an environment where their brand is going to be safe and protected. They're not going to be up against something that could be potentially considered negative or wrong, right? And we're seeing that problem happening in social media. I fully expect Facebook to continue to tackle the fake news issue. I fully expect advertisers to continue to want to be on Facebook because it's such a powerful platform for communicating and for advertising. It remains to be seen, but I really do think that Facebook's got a way out of this.
Does Twitter have a way out of it?
That is a good question. You know, Twitter is definitely in a lot of challenges right now. You know, we're seeing usage declines. We're seeing ad revenue, you know, starting to slow. We're seeing the company start to jettison some properties like Vine that it once thought was going to be very promising. So to me, this is a company that's starting to batten down the hatches for preparing itself to have the assets that are available if and when a sale should come. So it's really focusing on the main things that it has.
And if they can find a buyer. It's been great having you. Thank you very much. eMarketer Principal Analyst Debra Williamson joining us all the way from Seattle, especially here. Coming up, FITBIT struggling to maintain momentum for its fitness tracker, and the stock is taking a hit. More details ahead. This is Bloomberg. A stock we're watching, FITBIT, having a rough day, plunging almost 16% in Monday trading. The company is eliminating about 6% of its workforce. That's 110 jobs because of falling demand. The fitness tracker is forecasting that full-year revenue grew about 17% in 2016, but that's down from a previous forecast of 26%. And we'll break down what this means for the future of FITBIT later in the show. Stock currently showing oversold territory. We're seeing it fall as $250 million. Coming up, though, we've got Silicon Valley CEOs speaking out against President Trump's immigration order. So how does this ban impact venture capital? We'll hear from Venky Ganesan, chairman of the National Venture Capital Association and partner at Menlo Ventures. That's next.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's begin with a check of your first word news. Police have confirmed now that 6 people were killed last night in a shooting at a mosque in the Canadian city of Quebec. 5 people are hospitalized in critical condition. Prime Minister Trudeau has called the attack an act of terrorism. He received a condolence call from President Trump. Terror suspect Mohamed Abrini was charged today for the November 2015 assaults in the French capital. He was charged in Paris after being handed over to French judicial officials by Belgian authorities. Authorities say Abrini and another suspect, Salah Abdeslam, were part of a cell that carried out the Paris attacks that killed 130 people. British Foreign Secretary Boris Johnson says passport holders can travel into the U.S. and are not affected by the travel ban on people linked to 7 majority Muslim countries. Johnson says he's been assured by the U.S. that the executive orders do not apply to Brits, regardless of their country of birth or dual citizenship. The White House says Iran has conducted a ballistic missile test and the U.S. is studying the potential effects. That is according to Press Secretary Sean Spicer, who says the nature of the launch is unclear and expects to have more information later. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. here in New York, 6:30 Tuesday morning already in Hong Kong. I'm joined by Bloomberg's David Ingles with a look at the markets. David, good morning.
Yeah, hi, Elisa. Well, I mean, lots to talk about here in the Asia Pacific this Tuesday. Obviously, when it comes to markets, suffice to say it's not going to be a good day across equity markets here in the Asia Pacific. I mean, when you look at, say, what's happening in New Zealand, first market out of the gate, 0.6% off. We're back to 2-week lows. Obviously, investors are still very much unnerved by the latest policy preferences of the Trump government. Next 90 minutes, we have 3 markets opening up. Australia's next up, 30 minutes time. Sydney's poised for declines. You look at futures in Tokyo and Seoul, those 2 markets are basically poised to fall as well. I mean, in fact, when you look at futures on the Nikkei, I guess the best piece of investment advice would be to just close your eyes because we're likely going to see an over 1% drop there. It's BOJ decision day, by the way. No policy changes expected there. Apart from that, we're also waiting for the latest update from India's finance ministry on forecasts there for the economy. China, Hong Kong, Vietnam, and Taiwan, by the way, are still shut for Lunar New Year. Apart from that, it's probably a good time to be shut given all the developments that we've seen. So I'm David Ingles here in Hong Kong. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Caroline Hyde. And the tech industry's response to President Trump's executive order on immigration picked up steam over the weekend, with executives from Google and Apple to Uber and Lyft all condemning the action and vowing to support immigrant employees. But a bigger fight might be just around the corner. Here's White House Press Secretary Sean Spicer.
I think with respect to H-1Bs and other visa, it's part of a larger immigration reform effort that the president will continue to talk about through executive order and through working with Congress.
The H-1B visa he mentioned is something the tech industry heavily relies upon. Bloomberg senior executive editor for global tech coverage, Brad Stone, still with us, live from New York at the moment. Brad, give us the lowdown on the H-1B visa. Just how crucial is it? Who is it crucial to? And how is it potentially not always used in the right way?
Well, I mean, it's right. As Peter Elstrom said earlier in the broadcast, it's used primarily in two ways. One, for kind of high-level, well-paid technology talent that, frankly, the big U.S. tech companies cannot find domestically. I mean, we've talked a lot about on this program about problems in STEM education in the U.S., and so tech companies are looking outside the country to bring in those executives. And that is the original promise and premise of the H-1B visa program. But then there's this other use, and some say abuse, where tech companies are bringing in, let's say, lower-paid talent to work in their IT department, sometimes in partnership with the outsourcing companies from India, like Infosys. That is what, from the draft H-1B executive order that we saw, it looks like the Trump administration is looking to reform.
And is this something that really will goad the tech executives yet further? I mean, we've already heard that we're going to have Elon Musk and Travis Kalanick of Uber speaking to the president. They're on his forum to go and have a discussion, but mainly about the immigration executive order thus far.
Look, there's a lot of anxiety right now. The Trump administration with these executive orders has not been acting with a lot of nuance, right? These are kind of big, broad, bold strokes that seem meant to uphold his campaign promises. So, the devil's going to be in the details. We'll see, but I think that they're all girding for a fight right now, I would imagine.
And we'll see how that plays out, probably on Twitter. Bloomberg senior executive editor of global tech coverage, Brad Stone, you're going to be joining me in a little while later. Now, staying with Trump's immigration order, we spoke with Venky Ganesan, managing partner at Menlo Venture and chairman of the National Venture Capital Association, and asked him, what the recent rhetoric and possible moves to limit the H-1B visa really means for startups and big tech companies alike.
Well, we want to be careful, right? Because I think we don't want to throw the baby out with the bathwater. And there's something called the startup visa that the NVCA has been really pushing. And what the startup visa does is it gives immigrants who start a company in America and who create at least 5+ jobs the opportunity to stay in America. Now, that to me is about how we build American companies, buy American and hire American, because we get entrepreneurs to come and stay here and create companies here, not in India, China, or Israel.
And so, do we think that some of the moves being made could prevent people wanting to think that the US is the best place to start a tech company right now?
It can, and that's why I think it's important we need to balance these things. I understand the president and the Trump administration's goal to create jobs in America, and I agree 100% with that. But my belief is that we do that by setting up a visa program that allows immigrants to come here and start companies here and hire Americans. And that's how I'd like to make sure that we modify the H-1B visa program or the startup visa program to do that, so that people can come and start companies in America.
Where do you think maybe we might see talent go to? Do you think that we might start to see the talent pool dry up when we see such hurdles being put in front of immigrants?
We already know that, Caroline. If you look at this data, it used to be that 90% of venture capital was done in America. Now, in 2015, our share of venture capital in America has gone down to 52%. Other countries, whether that's India, China, Israel, even Canada, Australia, Europe, they're catching up with us. If we make it harder for the best and brightest to come here, by the way, these are all skilled legal immigrants, then they're going to go somewhere else and they're going to create the jobs there. That's what we got to stop. We got to make sure that they come over here and create jobs in America.
So if you had Donald Trump's ear right now, whether you're going direct messaging via Twitter or however you want to be communicating, what would you be saying to him right now when it came down to the HB1 visa or indeed the startup visas?
I would say to President Trump that immigrants and immigrant entrepreneurs play an incredible role in our economy. If you look at the number of startups that are funded in Silicon Valley and that have immigrant founders, or you look at the number of unicorns, half the unicorns have immigrant founders, these people create jobs in America, create wealth in America. And what I would tell Mr. Trump is that we should figure out a way to keep them. These are skilled legal immigrants who make us better.
That was Venky Ganesan of Menlo Ventures. Now, Silicon Valley's vast response to Trump's executive order on immigration is drawing praise. Former Treasury Secretary Larry Summers spoke on Bloomberg TV earlier.
I've been glad to see what many in the tech community have said. I think they've recognized that as global businesses, they've got a huge stake in the United States being a nation of the Statue of Liberty rather than being a nation of refugee camps and barbed wire. They've got a huge stake in the United States supporting an open, tolerant global system. They have that stake for their employees. They have it for their customers. They have it for the reputation of the United States, and they've spoken out. I've been gratified by what we've heard out of the tech sector. We've heard rather less so far out of the mainstream business community, and I'm going to be watching in particular the members of the advisory board that President Trump has appointed to help him make America great again.
That was former Treasury Secretary Larry Summers. And Microsoft co-founder Bill Gates also weighing in on President Trump's executive order on immigration and its impact on tech. His thoughts coming up next. And also coming up, two of the most successful startups in Silicon Valley had two very different reactions to the travel ban over the weekend. We look into the divergence between Airbnb and Uber and what it reveals about the future success of each company. This is Bloomberg. Now, General Motors and Honda are taking their tech partnership to the next level. The companies are teaming up to manufacture fuel cell systems for use around the year 2020. GM and Honda began collaborating 3 years ago on technology to eliminate tailpipe emissions. The automakers will split an $85 million investment and operate within GM's existing battery pack manufacturing site in Michigan. Now, the events of the last 48 hours have put a lot of focus on tech companies and leadership. The CEO of Airbnb was lauded for his strong words against Trump's immigration proposals, tweeting that Airbnb is providing free housing to refugees and anyone not allowed in the US. Meanwhile, the hashtag #DeleteUber campaign gained in popularity after the company continued to send cars to JFK Airport, despite New York City taxi strike in response to Trump's executive order and protests. And we're once again joined by Brad Stone with Bloomberg Technology. He's been following these two companies for years and has written all about them in his latest book, The Upstarts: How Uber, Airbnb and the Killer Companies of Silicon Valley Are Changing the World. Out Tuesday. Brad, I'm very pleased to say I've had a cheeky, sneaky peek at this particular book, and I love it. I advise every viewer to go out and get it. But what about, first of all, talk to us about the myth debunking. The very genesis of Airbnb and Uber in large part started at the inauguration of Obama back in 2008, and now we're at just post the inauguration and Donald Trump. There were a few myths around how they were set up, though, to do with conferences. Yeah, well, first of all, Carolyn, thank you for the book plug. I appreciate it. It really is remarkable how these two companies started exactly 8 years ago. That both sets of founders were kicking around at the inauguration of Barack Obama, talking about their crazy ideas. And the book kind of intertwines the two stories, very similar, very representative of this last wave of Silicon Valley innovation. And unlike the previous tech franchises of the past, like Facebook and Microsoft and Google, it was a fight for both companies in every city. And, I kind of chronicle how they did it and why these CEOs had to be a little different. They're not the introverted technologists, but they're storytellers. And they had to kind of leash together these political coalitions. Travis Kalanick of Uber, Brian Chesky of Airbnb, bring their customers to support them to basically create these international companies. And you say about how their characters were different, perhaps from the founders of Google and Microsoft and Apple. They were more extrovert, and that didn't always sit well with some of the big investors. Who lost out here? Who won?
Well, I mean, and that was fascinating for me. You know, we consider venture capitalists to be the kind of soothsayers of our world, and yet it's hard for them to see the future as well. 150 of 165 investors who got an email in 2010 about a company called Uber and an opportunity to invest did not even reply to the email. It just it seemed different. It seemed like it was going to be a fight. The CEOs seemed different. They weren't, you know, they weren't sure. Investors weren't sure that they could trust Travis Kalanick. He had a reputation as a little bit of a pugilist. Well, it turns out that's exactly what you needed. And so a lot of people kind of, you know, embarrassed to say that they missed out on these huge companies.
Interesting now that Travis Kalanick himself is, well, perhaps not always trustworthy by some of those outside of Silicon Valley, but he is aligning himself with Donald Trump to a certain extent, helping be on the advisory panel, for example. They aren't afraid to rub up very close to authority and sometimes seems now work with them.
Well, let's be clear about what's going on, because this is the source of the backlash, the Delete Uber campaign. Travis is on this business advisory council along with Elon Musk and the CEOs of IBM and GM and Nike. It's a big group, and they want a seat at the table. I don't think it's all that unusual. You know, and yet, we have to say that, you know, people have a little bit of an ambivalent relationship with Uber. They seem to be willing to expect the worst from it for whatever reason, that probably a lot of the history that I lay out in my book. And through almost a sort of misunderstanding over the weekend, because Uber was facilitating rides to JFK, so was Lyft and Juno, frankly, for that matter. They don't tell their drivers what to do, but nevertheless, you know, they tweeted a message saying that they were not going to turn on surge pricing. Nevertheless, it was construed as an advertisement, and now we have this mess of an anti-Uber campaign right now.
Yeah, and it's something that you document in your book very well. There's sometimes perhaps a few PR masterstrokes gone wrong when it comes to Uber. But what I'm fascinated about now is the new administration. If we think about it, well, Airbnb is actually a threat to one of Donald Trump's own business lines. You've got Uber. How much has he spoken to or for or against these particular startups or upstarts?
Yeah, I mean, Donald Trump is, of course, probably the world's most visible hotelier. So perhaps not a great position for Airbnb. You know, they were pretty closely aligned with the Obama administration. Brian Chesky had a relationship with the president. And yet, you know, the challenges these companies have faced have been fundamentally local. It is cities and states that are governing their future. So I think the threat with Trump is he could get on his Twitter soapbox and maybe, you know, create some problems for the likes of an Airbnb. It would be a conflict of interest because he does own hotel properties, but that has not stopped their president in the past. But I think, you know, it's one of the reasons why we see Travis of Uber stay on the business council despite the PR hit. You know, they want a seat at the table. They want to further their agenda. Elon's on that council as well. He's got an agenda as it relates to, you know, alternative energy. He doesn't get the criticism, and Uber does because it's high profile.
Yeah, and certainly, well, maybe Peter Thiel, the investor, helps whisper sweet nothings about Airbnb in Donald Trump's ear, but Uber being called ethically challenged, I'm sure Travis will be taking that directly to the president and see how that relationship blossoms. But thank you again, Bloomberg Technologies' Brad Stone. You can pick up a copy of The Upstarts. It's out Tuesday. I urge you to get your read on. Now, as we've been discussing, the tech community has been quite vocal in its opposition of Trump's recent immigration order. On Charlie Rose, now Microsoft co-founder Bill Gates, along with Berkshire Hathaway, if it's a US pronunciation, CEO Warren Buffett, discussed the importance of immigration to the US economy and tech.
The most important import the US has ever had, by far, is human talent. It's been to our benefit that a lot of the hardest working, best and brightest from almost every country in the world have wanted to come to the U.S. And so if you look at university departments or, you know, doctors, engineers, people starting up companies, building jobs, it's been a huge strength of ours. We haven't always made it super easy for that to work, but it has worked very, very well. So the number going back, it's meaningful, but net, we are still a huge beneficiary of human talent.
That was, of course, Microsoft co-founder Bill Gates, joined by Berkshire Hathaway CEO Warren Buffett with Charlie Rose. And you can catch the full interview at 6 and 10 p.m. in New York. Now, as we've been discussing, tech leaders from Alphabet to Uber have weighed in on the Trump travel restrictions introduced over the weekend. On Monday, Bloomberg TV Canada caught up with BlackBerry CEO John Chen, Republican who advised President George W. Bush. He shared his views on why he opposes the ban. Take a listen.
I understand the reasons of protecting the U.S. In terms of safety and of the country, but I thought this is quite an extreme move, and one that came quite suddenly.
And Chen later said that the travel restrictions were too broad and confusing to be successfully implemented. Now, coming up, Fitbit announcing it's cutting 6% of its workforce amid declining demand for its fitness trackers. So what does the future of wearables look like? We'll break it down next. This is Bloomberg. Fitbit feeling the pain right now. The company is eliminating about 6% of its workforce, 110 jobs, because of falling demand. Now, Fitbit shares fell the most in almost 3 months. In fact, hit a record low, falling as much as 16% to $6.10. Fitbit's facing more competition from Apple's watch and cheaper models from China. Joining us now from New York is Bloomberg's Selena Wang, who covers the company. And dig into us, will you, the impact of what they're trying to do is cut costs here. How much of that is going to be helped by the job cuts?
So Fitbit said they wanted to reduce operating expenses in 2017 by $200 million. Now they're eliminating 6% of the workforce, and if you run through the math, that's just a relatively small proportion of that $200 million. So it's likely that the rest of the cost cuts will come from sales and marketing expenses, which are pretty high, as well as perhaps paring back their R&D expenses. Another interesting thing, though, that was buried in this long announcement was that they want to reset performance incentives to retain employees. And with that, they said that CEO James Park and the CTO are both going to be reducing their salary to $1. So that will probably also have somewhat of an impact on the operating expenses for 2017.
Certainly will. The work coming cheap. But Selena, we actually spoke to James Park a little bit back ago at the CES. And what's so odd is he sounded so optimistic. Have a listen.
Our preference is to compete and win in the marketplace, and I think our numbers clearly show that. We're number one in, again, almost every country that we're competing in.
Big talk, how it seems that they're having to unwind that at the moment. Is this a Fitbit problem? Is this a wearables problem?
Not surprised he was talking the big talk at CES, but yes, you're right. This is not just a Fitbit problem. This is definitely a secular decline. The global fitness band has experienced a slowdown recently, and we've seen companies from Jawbone, Pebble, Microsoft, Nike, they've all really struggled to gain traction in this fitness band market. Fitbit is still the market leader in this industry. They are, as you mentioned earlier, facing increasing competition from the high cost end from Apple and also from the lower cost end from the Chinese manufacturers. And we saw from last quarter that they really struggled to gain traction in China. This is a big market for them, but they haven't really hit the spot there. Asia Pacific has definitely struggled with declining sales. Another big problem is that just overall, wearables really haven't found its niche, its must-have reason for everybody to have it. It's really kind of become relegated to this gadget category.
And Selena, they have been trying to pull it other ways, perhaps, to make this more omnipresent. They're going into relationships with insurers. I mean, give us your idea of where they go from here. How can they salvage this?
James Park for years has been saying that he wants to turn Fitbit into more than just a gadget hardware company. They want to turn it into this digital software health company that works with the healthcare industry, even potentially selling them FDA-approved medical devices. They've made some headway into this goal. They have a corporate wellness program, but remember that's only about less than 10% of revenue. They've also been cutting other deals with players in the healthcare industry. But in the more immediate future, they need to execute on their strategy of diversifying their revenue stream. They are looking to expand into smartwatches. They've acquired startups like Coin, Pebble, and Vector, and the goal is to integrate some of those assets into their new product. I think that in the near term, it will probably still be very painful for Fitbit, though, because it does take a lot of time to develop the smartwatch.
And painful for investors. How the mighty fall when you look at the share price at a record low. Bloomberg's Selena Wang, great analysis. Thank you for joining us from New York. Now that does it for this edition of Bloomberg Technology. Coming up on Tuesday's show, it's a blockbuster day for earnings. Apple is set to fiscal first quarter results. We'll have full coverage, highlights from the call, along with instant analysis. You know it, we've got it. Remember, all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. We're at Bloomberg Tech TV weekdays. That's 5 p.m. in New York, 2 p.m. right here in sunny San Francisco. That's all for now. This is Bloomberg.